Hello guys, welcome to my YouTube channel once again. In this video, I want to show you guys how to go about different time frames to identify structures that can help you, make some good profits in the market. There are some times you look at the market on a certain time frame and the chart looks disturbing or confusing, looks messy. Then, if you can go on a different time frame, you might find structures that make you understand what the market is actually doing. For example, this is Boom 500 index. I have taken some trades on this particular pair. I think some 2 days ago and yesterday. Then there are things I need to share with you which will help you also be able to identify these structures. Now, for example, if I go to the daily time frame, I will confirm. You can see the market is actually bearish on the daily time frame. The market is bearish. Then if you go down to the 4 hourly time frame, I want to first of all consider this particular spot around here. Let me just mark it out. You can see that this place here is somehow on this time frame you might be confused on what to do because the market is actually would I say ranging or consolidating. The market is not selling nor buying, it's just moving up and down within this space. And on this time frame you might get confused on what you're supposed to do. So at this point, if you are, you may want to wait for the market to break above this zone. Like you might want to see the market, you want to wait for the market to come to break and close above this zone. Then you think of getting some buys, or you want to wait to see the market coming down to sell below. This is a very strong support zone right here. You want to see the market coming to close below this zone, then you look for an entry. And by so doing, remember your target, you'll be focusing on this particular low here. Let me get the arrow line too. Your target, your mind will be focused on this spike here, because the market can easily react on getting to this low. Like we had this, you can see the week we had on this bearish candlestick. All right, so now while the market is still struggling to get out of this consolidation, this must take a couple of days. And if you look at when the consolidation started, was this should be 3rd of January up till this date, or which is 6th, I guess. So so the market has been consolidating. So all you would have to do is to quickly go down to a lower time frame to look at the structures, because you may have clearer structures on the lower time frame, which if you would want to wait for this particular for the market to finish its movement within this time frame, on this time frame, within this range, you might end up staying here for 2 days without taking any trade, especially if you are someone who just tries to concentrate on a particular pair. So but if you go down to the 1 hourly time frame, let's look at the 1 hourly time frame. I'll show you guys some things that you will see. All right, so you can see this on the 1 hourly time frame. There's a structure here on the 1 hourly time frame. And what structure is that? You can see there's a head and shoulders pattern right here. This is a left shoulder. This can be assumed to be the head, and while this can be seen as the right shoulder. And before the market even gets to this point, what about all these other points around here, all this other side of the market? What would you have done, guys? All right, so the first thing you need to do is look at the time frame. Can you identify any kind of trend within this? Can you, even if it's a short trend, this is basically for those who would want to scalp. Can you just identify any trend? Can you identify any trend within, like what will have? You can see the market has been creating lower highs and lower lows. Then the market broke out of it. Then even sold below this low, then came back and then continued buying up to this zone again. Then it created another trend. You can see there's another downtrend here, lower highs and lower lows. You remember the strategy? Like after these impulsive buys, you look for lower highs and lower lows. Then you join it and wait for a breakout. Then you take your trade and just be picking your profits. Once the market gets to this zone, you take your profit. If you are selling, once the market gets to this zone, you take your profit. Now, this is just for this time frame. But if we go to a much lower time frame, let's go to the 15 minutes time frame. You identify more clearer structures there. All right. Now, for example, here you can see we have something that looks like a double top here. This is a double top on this time frame. Now this is a double top, guys. This one top, this another top. Why? Because we have a consolidation around here. It took the market a couple of maybe hours or so before it was able to go up, then come back. So if you put a trend line just right here, guys, this is a double top. And you can even use a horizontal line to mark or a rectangle to mark this as your neckline, guys. This can be your neckline. So if you're able to identify this kind of structures, you'll be making so much profit in the market on a regular basis. Now let's say you enter the trade on the close below, when the market closed below this zone, then you can enter a sell trade, and then you can take your profit either here. You are just scalping, you understand, maybe 2 candlesticks or 3, you are out of the market with some profit. Now when you enter the trade, remember your stop loss should be above this high here, this stage here, this level here, because the market will most likely not get above this zone. There's a zone around here now, you understand. And also, for those that are maybe would I say aggressive traders, they would want to enter the trade right at this point, because this is another double top right here. This first top, this is a double top, this is a neckline. You know, it's in line with the previous resistance zone. So on the close below here, somebody can easily enter a trade, put a stop loss just right above it. You know, one of the major problems people have is the fear of market hitting their stop loss, even when they know that the market can possibly get to that particular point if it wants to maybe do a little retracement. Like, you know, the market can possibly get to this zone here where we have this resistance turn support, but you see someone will still want to put a stop loss somewhere around here instead of putting it a little above here, you understand. And the market little spike and hit your stop loss, and market then continues selling, start selling to the downside, and you'll be like, the market hit my sell before going my way. You did not set your stop loss properly, guys. All right, so this one opportunity here that you would have traded. Now let's keep on looking at it. Now you can see after this, the market started creating lower highs and lower lows, lower highs and lower lows. If we put this trend line right here, let me bring it this way so that we have more points, more touches. Now while the market is selling, keep on the while the market is creating lower highs and lower lows, you do not have an entry. If you look at all this, you can't find an entry at this point. You know, there is no entry, because you see the market created the first high, the second high, and you'll be looking, all you're looking out for is the market to break above this trend line. And you see what the market also did. While it was still selling, it went below this zone here, and in that case, what you'll be looking out for is for the market to break above this trend line and also above this zone for you to confirm the market is actually ready to buy. So if you do not identify this zone on time, then maybe you, after a breakout, you decide to enter a trade. Forget the fact that this spike was able to go above this zone, then you enter a trade. If this zone was a little above you enter a trade, trust me, the market can easily send you back, can still come down here, and you put in losses, guys. All right, so you wait for the market to, like what happened there, you see the spike. After the market spiked, it went above the trend line and the zone here, then it retested and danced a little around it, then you see the massive move to the upside. You understand? Remember, this is a continuation setup. That's a kind of a continuation strategy there. All right, then the market started selling again. You see it sold down to this level, did a little consolidation, then went up again. Now you can see that is another double top there. That is another double top there at that point. That's another double top there. So you can see on the close below, if you enter the trade and you put your stop loss here, the market sold, but unfortunately you get hit at this point. Now why would you not, why you get hit is because the market, there was a spike here, and this does not mean that that strategy does not work. Does not mean so, because after all, there is no strategy that is 100% perfect. There is no 100% perfect strategy. As long as this strategy is concerned, trust me that most majority of the time you'll be winning with this strategy, guys. This is a double top here, and this is a neckline here. You wait for the market to, as the market closes below, you enter your trade. Then you wait for the market to continue selling. But for this one, after selling to this point, you see the market retraced. I did not sell again from this point. It had to go up a little before selling to the downside. So even if your stop loss would have been hit here, it doesn't really matter. At least it must be something that you are willing to lose before you enter the trade, because you cannot say this strategy, I'm not supposed to lose with this strategy. You must lose. There's no strategy that does not that you won't encounter losses, guys. All right, so but as I used to tell my students, if after you enter a trade and set your tip, your SL, the market hits your SL, then wait. If you see the market retracing back to the zone, like coming back to this zone, then you can enter the sell trade again. You see the market sold nicely to this place. See the market sold nicely back to this place. And also you can also notice that the market, while it was doing that, it created another trend again. Another trend. You see, it created another trend now at this point. You see, and if you look closely, you will see there was a zone here. There was a zone at this point which the market respected and finally broke above it. You can see market sold from here, bought from here, sold from here. Then this major spike now broke above this zone. Market tried to consolidate to then continued buying. So now all these things are happening within the 4 hourly, the 4 hourly time frame range we saw here. It's happening just within here, which if you were waiting for the market to actually give you this opportunity, or waiting for the market to break out, you would be missing out on these little opportunities, these little scalpings that would have given you some good profit. You understand? Within these same little scalpings, you see people were making thousands of dollars, hundreds of dollars if they have good account size. So you see the market did all this. And then now also now look at another one here. This is the one I took advantage of. I actually met this one. So you can see the market was creating lower highs and lower lows. You see, after creating this high, this is a lower high, this is a lower high. All right. So I I noticed that the market created these two. I saw the market at this point, so I saw this as the first top and this is the second top, for the fact that the market got down to this level before coming to form this high, and it was coming down again. So I noticed it's going to be a neckline, and for the fact that this is actually a kind of a support zone too. So I marked my horizontal rectangle. You can see the rectangle. Then what else, guys? What would you wait for again? For the market to close below, right? Then my stop loss was somewhere around this place. So I entered the trade. My target was this support zone here. That was my target. And also why I really entered the trade, I had that conviction the market was going to sell, was because if you draw a trend line, you'll notice that the market is respecting a trend. The market is trying to respect a trend at this point. So when I noticed this, I knew the market, it was actually going to sell. So I entered that trade, and you see, I was in deep profit. No, I think I didn't even enter. I think I entered the market, the trade somewhere around here. Then it broke this trend line, because there are times you will see, and the market will most likely break the neckline, then do a retest, then continue to sell. So I entered the trade before this neckline. I don't know if I can just get the screenshot of that trade to share with you guys here. All right, so you can see the massive sales. You can see the massive sales to the downside. So you can just make profit with this, guys. You can make profit with this. So considering the double tops and the double bottoms, if you are able to identify the first top, you see the market sells to a resistance zone, then goes back towards where we have the previous the market sells to a support zone. I notice the market is now buying back to a resistance zone. Watch out for the price action. If it moves, if it gets to a point and start creating candlesticks that indicate it's going to reverse, know that that's actually a double bottom it's trying to create. Then you can enter the trade once you have an opportunity at the top of the second top, then enter a trade at that point. If you are unsure of where the market is heading, you can just take your profit as it gets to the neckline. But if you notice there's actually a trend like this, then know that if this was the first touch, this is the second touch, then this is the third touch, the market will still sell below this low. Or you can just take your profit here, then take another profit down here. All right, so these structures do work. There's another one here, guys. There's another one here. I didn't notice this one, guys. I didn't. This one is massive. This one is really massive, guys. This one is massive, guys. If you look closely, you'll see what we have here. It is a head and shoulders pattern, guys. This is a left shoulder, this is the head, and this is the right shoulder. All right, so I had already marked this zone previously because I noticed the market has been consolidating. I've been buying from this zone. So I didn't notice when the breakout happened. So you can see market after creating this left and shoulders head and shoulders pattern, it finally broke through this zone, and sold nicely. These massive sales, guys. And now look at what I told you guys. Once there is a break and close below, you can enter a trade. Now if you are waiting for a pullback or a retest on the neckline, then you might be waiting till tomorrow, because it did not happen. It doesn't mean it's not going to happen. It will happen whenever the market gets back around this zone. You understand? But for now, it did not happen. So if you just see a breakout and close below or above, depending on the direction of the market, you enter a trade and just put a stop loss. This one, the stop loss will just be right here. The stop loss will be better placed right above where we have this little zone, or the right shoulder here. You see the market sold nicely. Allow it to sell. Allow it, as long as your analysis is correct, guys. And mind, you don't need to hold the trade for so long. You don't need to hold the trade up down to where we have it right now. You don't need to hold this, so you can just, after a few candlesticks, get your profit and you step out of the chart, guys, or the market, I mean. So these things work. If you're able to identify these patterns, guys, you'll be making money on a regular basis. I'm telling you, if you can identify these patterns, and even if you want to scalp, you look for these patterns, you can find them even on the 5 minutes time frame, guys. Even on the 5 minutes time frame, all you need to do is train your eyes to identify them. Train your eyes to identify them. If you see a structure on a higher time frame and it looks confusing, go to a lower time frame, and you might find some structures that can still give you profit. Except you want to trade and hold the trades for a long time, then you wait for these setups to happen on a higher time frame. Then you're gonna make some profit. You understand? For example, I think, is it crash 1000 index or crash 500 index? Let me quickly check. Is it crash 500 or crash 1000? Let me see on the daily time frame. On the 4-hourly time frame, is it this pair? I can't recall. Okay, I'm not too sure. There's a pair I saw something very important. I saw something, maybe crash 500. I think I saw on crash 500. You see, still buying massively. Let me see on the 4-hourly time frame. I'm not too sure about that. I'm not sure where I saw. There's something I saw and I would have shared with you guys. Maybe volatility index. I think V50, yes, on the 4-hourly time frame. Okay, yes, V50. Now there is something here, guys. Let me just move these drawings. I know this video is too long, but sorry about that. It's going to help you if you can just follow what I'm going to show you. Oh, sorry, let me take this out. All right, so now you can see the market has been selling from here. This is actually double bottom right here. This is a double bottom, but why didn't the market buy? When I told you, if you notice that the market is actually you're not too sure, you can just, if you notice when the market is beginning to form the second bottom, you like this, you can just enter a trade and take your profit as it gets to the neckline. Like you can see, the market was able to break above the neckline, but unfortunately on the lower time frame, I think this is something I should treat in another video. On a lower time frame, the market was appearing as though there is a total breakout and nothing will, it won't come back down. If you go to the 15 minutes time frame, you will see the market broke out nicely and bought. Can you see this, guys? Can you see this? Can you see this on the 15 minutes time frame? The market broke out nicely and bought about how many 15 minutes candles, still about 4. So all I was hoping was the market was going to come back to retest here, then continue buying. But unfortunately, that did not happen. Why? See what the market did on the 4-hourly time frame. The market came back and returned, left a wick at the top. This is what the market did. It rather left a wick at the top. That was why the next candlestick sold. You remember that strategy? You can see it left a wick at the top. So that's why the next candlestick rather sold instead of buying, because it closed bearish and below this zone. So if you can be taking note of those breakouts and retest stuff, like once it's breakout, check if, go to a higher time frame. Anyway, I will take time to explain that to you. Meanwhile, there are things you will need to learn to identify on the chart, even when trading resistance and support, breakout and retest, those the double bottoms, double tops, that will help you get good trade setups and signals. All right, guys, so the video is already too long. Please don't forget to like this video, share your thoughts in the comment section, and subscribe to this channel if you've not done that yet. Invite others to join and get the values I'm sharing with you guys here. All right, see you and stay blessed in my next video. Bye.